Hello and welcome to another update video about Natgas. Quick overview here. We are still looking at this expanded flat. That is at least here our primary scenario. The primary scenario is still that the price should and could move higher as per the wave count here, which I can stretch out a little bit more, but it's not so important. It's a relentless exercise. The overall idea is that in this wave 4, we have an A, B, C structure, and that we're currently moving in this C wave, highlighted here in blue, which is, however, not unfolding as an impulse. So wave 4, for example, could unfold as an impulse. Sorry, a wave C can unfold as an impulse, and that would be very easy to track. Now, impulses are, for analysts and traders, the most easy waves to deal with because they have clear rules, guidelines. When you ask two Elliott wave analysts and you're looking at an impulse, normally at least you get very similar results. When you look at a massive correction like this, then you get different results, different interpretations. And that's just because this here is a so-called ending diagonal. They are not so clear, they are quite messy. And my interpretation of this, and we always need to be careful we don't do over-labeling here, yeah? I mean, you need to understand this is obviously analysis. You know, I do this on YouTube. We also do this a little bit for education. For trading, you don't need all these waves on here, okay? I just show them. Also, they allow us to calculate relevant resistance and support levels. See this as a guide path higher, which of course can break at some point, like any trend line can break as well. But if all goes well, it should follow through and a few higher levels should be reached within this C wave of a wave 4. We've got Fib levels at $3.15, $3.91, and maybe even $4.52. I'm not sure if we get all the way up there because, prices or structures, they can correct over time. They can correct, a market can correct prices over time or, over price. So that means either you see a very sharp correction that might not take that long, or a very, very, let's call it shallow correction, but it might be very much stretched out over time. And I think this is what we see here, or at least a mix of both. So I don't necessarily think it will reach the maximum here of wave 4, $4.52. Our primary scenario is still that afterwards we should get one more low. At least I'm looking for that. And the reason is that this can be counted so nicely as a flat structure. Basically an ABC structure in a correction. Can I rule out that the overall low is already in? No, that would be my overall alternative wave count. Yeah, so primary scenario is go a little higher, come down. That's our base case. In an alternative scenario, the overall correction was finished here in April. But for me, the market hasn't done enough to show me and to prove to me that this low is already in. It looks very much like a correction, very much like a three-wave structure. If we see the first 5-wave move to the upside, maybe even above resistance, then I will watch for a pullback zone that could be used as well for entry points, for example, okay? Then we can say, okay, probably the trend has indeed changed, but it's way too early for that, okay? This just looks like a so-called flat structure. We haven't even come close to the maximum what it should do. So even though it could be finished, okay? So the minimum requirements are achieved as well. So I am currently in a situation where I'm actually watching if it's breaking down. But also that's not the primary scenario. Primary scenario is just to follow the guide path here. But to keep it very simple, it's moving in an ascending price channel. I would be happy if it breaks to the upside because then it would just follow here the guide path laid out. If it stays within the channel, that's fine as well. It would just take much longer. And it would just carry on in this ending diagonal. Okay, so short term, higher expected, then down. Any move down can happen, of course, anytime. But then I would need to see a break out of the trend channel to the downside. That would be in line with our base case, one more low. If it forms a structure that is not in line with our primary scenario, and then I would have to assume the low is already in and then we will adjust. But until then, there is no adjustment needed. And this wave count has guided us well over the last, 6 months? Yeah, probably nearly. So we are following this. At the moment, the assumption is that in this ending diagonal, as you can see, there is still a little bit of movement to do. In previous videos, we highlighted here that we could count a potential 5-wave move up and 3 waves down, A, B, C. I gave you a so-called opportunity area, trend reversal area. They don't always hold, of course, not in these messy structures, and also not when we deal with ending diagonals, not necessarily in a price channel all the time. But here we had good confluence between previous swing low support, we had trendline support and Fibonacci support, and yeah, it was a good area to, well, potentially for a careful swing trade. I wouldn't do any aggressive trades in this range anyway. I mentioned that before. You would not trade aggressively in such a range normally. Okay, you can do what you want, but you know, this is not an impulse, so we need to be careful. Now, as I said to you before, it's sort of now stuck in this structural resistance area between all these swing highs. So it's currently trying to get through. Okay, so we need to get above $3 next. It's already at $2.93. It's looking pretty good. And it could really be in this third wave. It's a third wave of a third wave. In this third wave, normally I would like to see the price reach the 1.618 extension. Okay, so that's what we want. We wanted to reach the 1.618 extension, which is actually at $3.10. Sorry, so we want to reach $3.10 in the third wave. I mean, it could be we have a small 1-2 setup down here. This could be a 3. Maybe it's currently working on the 4 of 3, and then one more high to finish off the wave 3. Important is to understand, so and then it should climb higher. And important is to understand what is the level, what's the level it now needs to hold to be able to climb higher in this impulse. Because this could be an impulse, this third wave, right? So I'm typically use the 50% retracement as a guide. Anything below that, I would sort of start to talk about a failure. I would start to talk about a failure, and that failure is most likely going to occur below $2.78, $2.77, which means if we see a break below $2.77, then we are likely dealing with a failure, and we might retest the lower boundary line of the ascending price channel again. Let me just take out the other fibs. I just want to have the 50% on just to show this is for me something like a make or break point. Of course, see it as it's still probabilistic. So of course you can get a wick below and then move up. But to be honest, looking at this, if the price breaks below this, then this immediate third wave impulse is probably not going to work out. We need to think about what else is it then. It wouldn't be bearish as long as we're in the price channel, but any break below the descending price channel could lead here to a more direct pathway to the downside, but I have no setup for that at this stage. Yeah, yeah, I think that should be clear. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.